And our next guest, he was right about the big rally. Dan Ives, Wedbush Securities Analyst. I would guess by the end of this year, you'll be atop the leaderboard of CNBC appearances, Dan. Although I'm willing to take an over-under on that. And you know what? I'm going to love every one of them. So happy New Year.
And it's great to be
here.
Good
to see you. You had a good call on tech overall. You continue to be quite bullish. Let's start with Tesla, though. Just give me your take on those numbers. You know, Phil just mentioned 2.3 million. Are you going to be towards the high end in terms of what you expect them to deliver this year?
Yeah, I think whisper expectations could be higher. Look, this was a strong result. You look what's happening in China. There were fears there, and it was actually a source of strength. We think a record quarter in China. So I do think this is an important, sign that demand's actually strengthening for Tesla. It continues to be maybe EV demand soften, but not Tesla demand, and that's the important thing going into 24.
Yeah, where is that line? Why is that the case then? And in particular in China, where BYD is such a strong competitor, are they going to be able to maintain their market share?
Yeah, BYD has done a phenomenal job, but I do think if you look in the driver's seat, it's Tesla and BYD. Gained some net share from NIO and others, and in China, especially if you look at the last few quarters, there were fears that this price war was going to continue. It actually hasn't. See, now, to Phil's point, you're seeing price stabilization. That's very important because now the Goldilocks scenario, margins upticking, demand upticking, that's where, in our opinion, you see $1 trillion market cap for Tesla over the next year, despite many of the haters continuing to hate.
He came out and he said 2024 is going to be a golden year for Tesla, and you wanted me to put this up here. You believe it's a golden year as well?
Yeah, I think Dan was reading my tweets. I shouldn't say that. Dan Ives is, one of my heroes. I love the guy. I love the way he dresses. I love the way he speaks. The guy's got he should be a poet. I mean, he's amazing. And he writes extremely well. And, he's been on target. He's been a bull for years and years. And he's been on target, and I think that he brings a lot to the table. But my word, 2024 is going to be some year. I mean, if you think 2023 has been a banner year, and if you understand what happened in 2023, just wait until 2024. It's going to for sure be the golden year.
Larry Goldberg just disclosed that 2024 will be a remarkable year for Tesla. Tesla had quite a rough year in 2023, but as usual, the automaker successfully scaled through, recording significant growth in both production and delivery. And now it's another year, and we're excited about what's to come.
We turn to Sam Stovall, CFRA Research Chief Investment Strategist, a great guy with stats on the market as well. Sam, it is great to see you. I want to start where we were just talking about, what Josh was just talking about. That is this broadening of the rally that we have started to see. Do you think that continues? And does it indeed mean that more gains are coming here into 2024?
Hey, Julie and Josh. Good to talk to you two again. Yes, I think that 2024 is going to be a surprisingly good year. Historically, good years follow great years. We've actually seen an improvement in the average price change by 200 basis points, an improvement by 10 percentage points in terms of frequency of advance after a 20+% gain. So that's the first thought. Second thought is this is the election year. First-term administrations, usually they're up about 15.5% on a total return basis, with every one of those years being positive. So again, another positive indication. I think we might, however, be getting a little bit overbought in terms of percent of sub-industries above their 50-day, stocks above their 50-day, the CNN greed fear factor being at extreme greed levels, et cetera. So I think maybe a post all-time high pause. But as Josh said, nothing really to fear because the next decline of 5% or more will probably come about 10% after a continued advance and would not likely lead into a new bear market.
So Sam, maybe some near-term overbought here, but looking ahead, some potential strong tailwinds. I am interested, Sam, after you've seen the rally like this, how does valuation look to you? Does that still look attractive even at these levels?
Well, at 20 times forward 12-month earnings for the S&P 500, it is higher than the long-term average, which is about 17. But I think because investors are anticipating an end to the rate tightening program, expecting to see the first cut, the street is looking for the first quarter. I think that the Fed's going to wait until the second quarter. But still, the market tends to advance about 14% in that 11-month period between the last rate hike and the first rate cut, lifting all boats, if you will, in terms of sizes, styles, sectors, and sub-industries.
Are there those that particularly stand out, though, as doing better in that kind of a scenario, Sam?
Yes, well, financials are one of the groups that tend to be outperformers in this Fed pause period. Real estate also does fairly well. And so I think also that taking a look at the groups that has done so well this year, they will likely carry over into 2024. History tells us that following a down year, you want to buy last year's losers because they're the ones that have the most to recover, and that's what we saw in 2023. But following an up year like 2023, you want to let your winners ride. So consumer discretionary, communication services, and tech, but also the honorable mention as found in industrials and financials.
Tesla has achieved remarkable growth and profitability in the past few years, despite facing intense competition and regulatory challenges. It's one of the most innovative and disruptive companies in the world, and is led by one of the most visionary CEOs. As we enter 2024, many investors and analysts are wondering what the future holds for Tesla and its stock. And one of the most bullish voices on Tesla is Larry Goldberg, a renowned technology and finance expert who hosts the popular podcast, The Goldberg Show. Goldberg has been following Tesla closely since its inception and has made several accurate predictions about the company's performance and strategy. Starting the year on an interesting note, Goldberg recently shared his 5 bullish Tesla predictions for 2024, and according to him, these are the game-changing catalysts for Tesla this year. In this video, we're going to explore these 5 catalysts for Tesla's growth in 2024, as well as what Tesla needs to do in order to make them a reality. So buckle up, and let's go on this interesting ride.
Is this, next gen, dojo, batteries, new plant in China, just so much stuff. Now, a lot of it is not R&D, building a factory is not R&D, but the work going into the new production lines, that's R&D. Work that's going into the new batteries, that's R&D. There's going to be the next gen of batteries. There's just so much R&D that they face. To me, it's going to be an increase, and the market, the stock market may not treat it very well because of their accounting rules. And so again, I'm not looking at 2024 for stock price movements of much consequence.
Okay, good thing that we know when we heard this from you. That's important to understand this and watch it. You have some thoughts on the margins in China. What is this about? This is shocking, surprising to me. What's your thoughts there?
Yeah, I think we're going to see margins in China under pressure in the first couple of quarters, and I think we're going to see a very significant improvement in the back end of the year. The margin problem is going to be because China's under enormous stress at the moment, enormous stress. That and a huge production coming up of cars that are competing below the Tesla current models, and which are going to eat somewhat into the Tesla sales of their current models, which is going to force the pricing down. So I think we're going to see price pressure resulting in margin pressure, even as volumes increase. This is classic China. Certainly classic China in tougher times. And China always goes through these ups and downs, although this time may be a very bad down.
There are several factors that could affect Tesla's performance in 2024, And these may include the development and production of its $25,000 vehicle, which is expected to be built in Mexico and target the mass market, the expansion of its global presence, especially in India, where it is negotiating new deals and incentives with the government, as well as the innovation and design of its next-generation vehicles, which Elon Musk hinted at in 2023. Hello, everyone, and welcome back to Tesla Tomorrow. Tesla is a visionary company that has proven its ability to overcome challenges and disrupt the automotive industry. However, it is also a volatile and unpredictable company that faces many uncertainties and risks. However, while it's hard to say what 2024 will be like for Tesla, Larry Goldberg thinks it will certainly be an interesting and exciting year to watch. And in the course of this video, we'll explore his 5 interesting Tesla catalysts. But before we do, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla.
Yeah, we're going to see the India announcement early in 2024. You know, it could even happen still in 2023. There are a few days left, but I think it'll happen early in 2024 officially. I think we'll see Elon and the Prime Minister of India together making the announcement. I think it's a very important moment for India and a very important moment for Tesla. And for sure, we're going to hear that Lathrop has reached its full capacity. For sure, Nevada, the building is going to begin in Nevada. It's been delayed. I don't even know what those delays are, but I have faith that we'll see the production, the development begin. China Megapack factory, they say, is going to be in production by the third quarter. I mean, it would be amazing, but I'd be very excited about that because I think they will go to the full 2-line production at the outset, which means that we will start seeing production by early of 2025. But just the completion of the factory should spur a lot of interest because, as you'll see in a little bit, I expect the flood of energy revenue and profits to come in 2024. What we've seen now is not even the beginning. What we're seeing now is just the buildup in terms of our revenue and profits from energy. So we're going to see that in really, really, tremendous output. So very excited about, all of these developments. I couldn't think about, what could be better other than Mexico actually starting and building and perhaps even being ready to start moving machinery in before the end of the year.
Number 1. New factories for Tesla. Goldberg believes that Tesla will introduce a new affordable EV model that will be produced in Mexico and target the mass market. To further drive home his point, the Tesla bull cited Musk's recent interview where he hinted at a revolution in manufacturing that will be represented by the new car. He also thinks that this move will drastically increase Tesla's unit volume and market share, especially in emerging markets where EV adoption is still low. Tesla is actively working to expand its revenue. Elon Musk, sometime last year, met with China's foreign minister as Beijing pushed to show it's open to foreign business, and the Tesla CEO reportedly signaled further expansion in China. The China's ambassador to the U.S. noted that Chinese-style modernization, characterized by a huge population and common prosperity, will create unprecedented growth potential and market demand. He added that China's electric vehicle market has broad prospects for development, and that China will continue to open up and create better market-oriented and law-based business environments for foreign firms like Tesla. Tesla is willing to continue to expand its business in China and other countries. Already, the automaker's biggest car production factory is in Shanghai, and Tesla has also announced plans to build another plant locally to manufacture its Megapack energy storage system. Number 2. Tesla's PR department. Tesla is a company that has revolutionized the automotive industry with its innovative electric vehicles, battery technology, and self-driving software. However, Tesla also faces many challenges and controversies, such as product quality issues, legal disputes, environmental impacts, and regulatory hurdles. These challenges and controversies often attract negative media attention and public criticism, which can damage Tesla's reputation and brand image. To deal with these challenges and controversies, Tesla may need a PR department in 2024. First, to provide accurate and timely information to the media and the public about Tesla's products, services, achievements, and vision. And also to respond to media inquiries, requests, and complaints, and to correct any misinformation or errors that may arise. This can help Tesla maintain a good relationship with the media, avoid understandings, and protect its credibility.
We're going to see a sea change in Tesla's positioning in the media. Now, it's true that Elon does not trust the media, and I think there's ample reason for that. But I think that how Tesla deals with the media and how it positions itself in the media is going to be a very big change in how it's been done in the past, and it's going to set the standard. And I think we're going to see advertising on a larger scale, on a very significant scale, but done in a way that only Tesla can figure it out to do, again, based upon first principles. So I'm very excited for that, because I've been one of those who advocated that Tesla needs to speak to the public in a much more visible way that people have access to, that a lot more people have access to than just those followers on X.
Number 3. Production and sale of 100,000 Cybertrucks. Musk has been hyping the Cybertruck as not only Tesla's best vehicle yet, but as possibly the best product ever. Already, there is lots of attention on the Tesla Cybertruck production program, as this vehicle is expected to have a significant long-term impact on the EV industry and the pickup truck market. Cybertruck pre-orders have also helped boost sales massively, with pre-orders reaching insane heights since its launch, and Goldberg believes that Tesla can sell a large number of this truck. Similarly, there are millions of EVs on the road in 2022, growing exponentially, and Tesla is currently serving a large number of these cars with its superchargers. A previous report from Goldman Sachs included estimates of just how much revenue Tesla could generate if it actually has other EVs charging on its network. In fact, the investment firm noted that Tesla could make over $25 billion per year thanks to this upcoming plan. And that's not all. Larry Goldberg has also said that Tesla's supercharging business could yield as much as $3 per Tesla share within the next 5 years. According to him, this would include Tesla expanding to multiple OEMs as the semi-charging business. In a recent tweet, the expert described Tesla's supercharging business as a small, profitable, and rapidly growing corner of the Tesla empire that has a significant future, adding that the latest Ford deal gives a clue to the huge potential of this business. He further described the business in 5 key aspects, namely its incredible capital efficiency, standalone profitability, huge upside potential, industry-leading network, and its potential as a key mission enabler. Larry Goldberg noted that existing OEMs have huge challenges to achieve an EV transformation without trying to build a charging network. Therefore, road trips without reliable, widely available, and fast-charging facilities are not practical. He further claimed that competing charging networks, particularly in the U.S., have largely failed to provide reliable, convenient, economic, and fast-charging networks. This means that in order to meet their ambitious EV plans, they need the charging problem to go away, and Tesla's network, which remains the best globally, is readily available. Now that there's a major surge in EV adoption and many OEMs are producing compelling EVs, it makes sense for Tesla to once again offer its vast and powerful supercharger network to other automakers.
Everybody's going to be very disappointed to see the rate of expansion of R&D expense. Mm-hmm. You and I have spoken about this before. I've talked about just how much money they're going to have to invest for all the stuff that they're doing. They're going to have 3 gigafactories in development before the end of this year. They're going to have the Megapack factory. They're going to have the expansion of Shanghai, the expansion of Berlin, all underway before the end of the year. They're going to be, getting to the peak of Optimus development. They're going to get to the peak of FSD development. and they're at the peak of getting the next gen developed. I think we're going to see a 50% expansion of R&D expenditure. Now, I do want to say that Tesla treat their R&D differently to the rest of the auto industry. Tesla do not capitalize their R&D and then depreciate it over, 5-year straight line development, as most of the auto companies do, which, is a very, very, conservative way of accounting that Tesla's doing. But I think I think that they should switch to the standard, because people compare them to General Motors and the other Detroit companies, and they compare them to the international companies. And the comparison is unfair, because you have to recast the depreciation before you can do that comparison, particularly in a period of dramatic rise of R&D. And they're facing a dramatic rise in R&D. I know that Elon hates spending that money. I know Elon hates spending any money, but R&D is the one thing that he does spend on, and we're going to have to deal with that. So we're going to see a very substantial rise in R&D expenses, and this is why there's not going to be a buyback in 2024 nor in 2025. Gary, I hope you heard that.
Number 4, more R&D expense. Tesla will invest heavily in research and development, particularly in the AI sector. Larry Goldberg thinks that the car company will leverage its expertise in artificial intelligence, or AI, and software to create new platforms that will allow developers and users to access and create AI applications. Something similar to Apple's App Store, which revolutionized the mobile industry and generated billions of dollars in revenue for Apple. Tesla will also achieve better full self-driving, or FSD, capability, enabling its vehicles to drive autonomously in any condition and location. Likewise, the automaker could also launch its robotaxi service that will compete with Uber and Lyft. And Goldberg thinks that this service will generate up to $20 billion in annual revenue and $10 billion in profit for Tesla by 2026. Number 5, more 4680 battery production. Goldberg believes that Tesla will continue to invest in its energy division, which includes solar panels, batteries, and power walls. The Tesla bull believes that Tesla will leverage its brand recognition and customer loyalty to sell its energy products and services to millions of households and businesses around the world. He also predicts that Tesla will become a global leader in renewable energy and generate $15 billion in annual revenue and $5 billion in profit from its energy business by 2026. Overall, based on his optimistic projections for Tesla's revenue and profit growth, Goldberg expects Tesla's stock price and Tesla valuation to soar in 2024 and beyond. According to him, Tesla will benefit from its strong competitive advantages and will attract more institutional investors and analysts who will recognize its potential and value. What are your thoughts on Larry Goldberg's comment about Tesla? Let us know in the comments section. For more exciting updates about Tesla, go ahead and click on the next video on your screen. We have so much to share with you. See you there.